Friends, in this podcast, I'm going to talk to you about the RBI's monetary policy announcements that came today and the growth outlook. Clearly, I have been anticipating that the economy will degrow this year. GDP growth would be negative. While the overall GDP growth would be negative, and it's not a difficult conclusion to come when you lose 2 months of economic activity, the productivity in some areas are going on as usual. Agriculture has been quite stellar and is expected to be the savior of the economy in a very, very difficult year. I've never seen a year where GDP growth was negative. This is something unprecedented. So, such an unprecedented year will also require significant responses from all stakeholders. Interestingly, the stakeholder whom we expected would be most vulnerable comes out as the strongest, the farmer. And the stakeholder whom we thought would be the strongest comes across as the most vulnerable, the industrialist. So we head on this journey through a very difficult year, trying to make the strong man stronger and the vulnerable guy survive. That's really the challenge before the central banker, the banking industry, and government. As consumers, it is important that our conviction in the growth story, our willingness to spend, is also restored. And that is where we haven't seen much till now. Why have we landed in this predicament? COVID is only the last straw on the camel's back. In my view, India has spent too much time and too much energy fighting inflation. Our approach to monetary policy has been overcautious. The risk-taking ability of our central bankers in the last 10 years has been below par. And we also had this institutionalized mechanism called the Monetary Policy Committee, which historically has fettered the economy than unleashed it. Which means that we have this fantastic mechanism to fight inflation, but no mechanism to create growth. It is with this kind of a framework that we are entering COVID. It's good to note finally that we are going to exit COVID with a better approach towards growth. And that is the essence of what the RBI governor has said today. Clearly, inflation should be managed and probably will be managed, but growth has to be curated. Growth has to be encouraged. Growth has to be catalyzed. And that job is going to be our biggest challenge in the coming years. Is it impossible? I don't think it is impossible, but it calls for a mindset change at all levels among all stakeholders, and it also calls for swift policy responses which are not defensive. If you want to play a game where you take your game into the opponent's camp, you need to play it aggressively and you need to play it objectively. You cannot play it defensively. And in that sense, the RBI governor today has definitely shown the right pragmatism. Now, it is the responsibility of government, industry and society to cultivate the same aggression in whatever we do and bring our mindsets more towards a growth orientation. Sadly, historically, at some point in the last 10-15 years, Indian politicians and society took growth for granted. COVID has basically rocked that belief, and rightly so, I would say, because growth can never be taken for granted. If we have grown well for a particular period of time, we need to do much more even to maintain that position. To take it for granted is certainly going to lead to slippage. Today we have got slippage from a pandemic, obviously from the wrong reason. but we have all the right reasons to correct our mental framework, our economic approaches and policy approaches to bring growth through integrated approaches, through everybody getting together and putting our best, increasing our productivity and creating growth. I would think that the next 2 years are going to be a phase of productivity, which means a lot of costs will be shed, a lot of productivity will be gained, a lot of mechanization will happen, investment will happen in multiple areas. Some industries will get killed, some will grow. So we are going to see a phase of economic churn. As an investor, I clearly see that that phase will lead to distinct value creation in some parts, value destruction in other. And it's the investor's duty to watch this very closely and take investment decisions incrementally as things become clearer and clearer. So it's a period to be very watchful, cognizant of the transformation that's happening around us, pragmatic and positive. Thank you very much for watching this podcast. Do subscribe to our channel and stay tuned. Thank you.